Happening now, a major escalation in President Trump's trade war with Mexico and Canada. For decades, Canada's economy was tied at the hip to the United States. Roughly 75% of everything Canada exported went south across the border. The trade relationship was vast, constant, and reliable, but that was yesterday's logic. In 2025, the trade partnership between the United States and Canada is being stress-tested like never before, and the pressure is coming directly from Washington, President Donald Trump's renewed tariff campaign, this time more aggressive and sweeping than anything unleashed in his first term, is forcing an economic divorce that few saw coming. This time, it is not just steel, it is not just autos, it is everything. In March, the White House imposed a 25% tariff on all Canadian aluminium and steel. President Trump's raising tariffs on steel and aluminum imports from 25% to 50%. Yeah, they're now in effect. CNN's Vanessa Yavich is at the magic wall to explain how this major increase may be passed on to consumers. Vanessa, what could be the impact caused by this doubling of those steel and aluminium tariffs? Then came the threats, 25% duties on Canadian cars and car parts. After the president announced Wednesday, the US will impose a 25% tariff on imported cars and car parts. If they're made in the United States, there's absolutely no tariff. Then a 10% levy on Canadian energy exports. For many companies, it was not just another tariff, it was the final straw. The old relationship with the United States is over, said Prime Minister Mark Carney during his 2025 visit to Washington, but not behind closed doors on camera with the world watching, and what followed was an economic shift. Canadian companies began turning away from their largest historical customer. A pharmaceutical firm in British Columbia started negotiating deals with Asian partners. A costume manufacturer slashed US prices just to move excess inventory. A steel component supplier in Montreal warned US buyers that prices were about to double, and they were not bluffing. Before we continue, hit that like button to help us beat the YouTube algorithm and to show your support. Label pack printing, once reliant on US business, made the call to shrink its US exposure entirely.
We are pulling back,
The company said, because if Trump throws a 50% tariff on our goods, it will wipe us out overnight. Across the country, the fear was the same: unpredictability. And that word, unpredictability, is what continues to reshape the map. Canada's leaders are not waiting around for the next round of tariff shocks. Instead, they are signing deals, new ones, big ones. In late 2024, Canada finalized a comprehensive economic partnership with Indonesia, a G20 economy of over 280 million people. The deal eliminates over 90% of tariffs on Indonesian goods entering Canada and strengthens investment in critical minerals like nickel and bauxite. Indonesia praised Canada as a trusted partner. Meanwhile, the US was busy pulling out of trade alliances. Canada, on the other hand, was doubling down. Its Indo-Pacific strategy, backed by $2.3 billion, targets 40 countries and 4 billion people. It is a diversification strategy, but it is also a hedge against a future where Washington is no longer predictable. By 2023, the early signs were already there. Foreign direct investment in Canada surged to over $50 billion, a 9% increase year over year. In contrast, the United States saw its FDI fall by 28%. The warning signs were blinking. We are creating predictability, said Canadian Trade Minister Mary Anna, not as a slogan, as a strategy. While Trump warned of a 10% tariff on Canadian oil, Canada began quietly retaliating, targeting US energy imports, positioning itself as the calm partner in a storm of threats. Before we continue, hit that subscribe button to show your support to the channel. Even in the auto sector, the shift was visible. Several major car makers warned that Trump's 25% auto tariff would add thousands of dollars to vehicle prices. Well, Alex Gregg, there are many, both foreign and domestic dealerships here along Capital Expressway. But the auto industry is very complex these days. There are US brands that are made internationally, and there are foreign brands that are made right here in the United States. So, how all of this ultimately plays out remains to be seen. Ferrari preemptively hiked prices by 10% in the United States. Rumors swirled that Honda was reconsidering a $15 billion electric vehicle project in Ontario, not because of Canadian policies, but because of American ones. US business groups from Michigan to Missouri pleaded with Trump to hold back the tariff avalanche. They warned him in letters and press conferences that if 1 in 5 jobs in Michigan are auto-rated, then slamming car makers with border taxes would not protect those jobs. It would destroy them. And quietly, multinational firms began redrawing their plans. Foxconn, the Taiwanese electronics supplier, told investors that it had already diversified beyond the US. Others followed. Semiconductor firms began scouting Canadian campuses for new research labs. Asian and European companies announced billions in new battery and critical mineral projects on Canadian soil. Because trade policy is not just about rules, it is about trust. And in 2025, Canada was winning the trust of the world. Even as Canada's economy absorbed the initial shock of the tariffs, it kept growing. In late 2024, its GDP expanded at a 2.6% annualized rate, better than expected. And while 75.9% of Canadian exports still went to the US, the trend was clear. That number is falling. Meanwhile, US exports to Canada actually dropped by over 1% from the previous year. In the US, the pain was spreading. Farmers saw retaliatory tariffs destroy demand for everything from Florida oranges to Kentucky bourbon. Steel distributors in Pennsylvania found themselves shut out of markets they had supplied for decades. Automakers began rewriting contracts to factor in rising Canadian costs. The ripple effect was turning into a wave. And yet, from the White House came more threats. Aides floated new levies. A spokesperson joked on background that Canadian businesses will not have to worry about tariffs once they become our 51st state. But Canadian officials were not laughing. Neither were investors. Neither were trade partners. And in the United States, consumers are beginning to notice. Higher grocery bills, higher fuel costs, higher sticker prices on cars that once rolled in cheaper from Ontario. Unifor, Canada's largest auto workers' union, labelled Trump's tariffs economic sabotage, a deliberate attempt to undercut Canadian manufacturing in favour of American producers. Except even American producers were being hurt. The logic had failed, and companies were taking notice. Canadian firms that once assumed the US market would always be safe were now adjusting, scaling back US sales, opening offices in Berlin, Jakarta, and Dubai instead of Buffalo or Chicago. One Canadian executive said it plainly. "We are telling our clients in America, your government has chosen to make you pay more." And in some cases, US clients are walking away, but others are staying and paying the price. So now the question is not whether Canada can decouple from the US, the question is how fast. As trade wars escalate, the difference in strategy is undeniable. Ottawa is not playing chicken. It is building a network, a firewall, a new global web of economic alliances that treat volatility like a threat and stability like gold. And the world is responding, because when one side builds walls and the other builds bridges, the message is not lost on multinational CEOs. As Mary Young said, predictability is no longer optional, it is essential. And if the United States does not restore that predictability soon, it may find itself more isolated than protected. What began as a disaster had become a strategy, reshaping the very definition of trade routes between Europe and North America. Further north, Denmark faced its own reckoning. In Esbjerg, the coastal wind capital of Scandinavia, turbine blades sat idle, some as long as jetliners. A brutal 30% tariff from the US had cancelled orders in a flash. Managers scrambled, projects were frozen, crews prepared for furloughs. But then came Canada. By April 1st, a green technology pact worth $1.5 billion was finalized. Denmark rerouted its entire renewable energy export network to Canada. Turbine blades bound for Arizona were redirected to Nova Scotia. Solar modules meant for Florida went instead to Saskatchewan. That same week, 150 Danish engineers boarded flights to Halifax and Regina. In industrial parks across Nova Scotia, 200 local workers were trained to install and maintain imported turbine equipment. In Saskatchewan, logistics centres doubled shifts to keep up. Thousands of miles away in South Korea, the silence inside battery gigafactories was deafening. A 20% US tariff had severed their ties to California. Pallets of lithium-ion modules stood still. Managers stared at spreadsheets packed with red ink. But Seoul didn't pause, it redirected. On March 20th, LG Cayman Samsung SDI inked a $1.7 billion deal with Northvolt Canada. 500,000 battery modules were assigned new destinations: Windsor, London, Hamilton. Packing crews worked double shifts. Labels that once read Los Angeles now read Ontario. By mid-May, 2 Canadian facilities each added 350 technicians trained in the precision assembly of Korean battery packs. In South Korea, 3,000 jobs were protected. Ulsan kept its lights on, and the global electric vehicle race, once reliant on US integration, was now plugging directly into Canada's growing EV supply chain. In Lyon, France, the mood was tense. At a facility producing hydrogen electrolyzers, machines capable of converting water into clean energy, orders had dried up. A 30% US tariff had brought production to a halt. Hundreds of millions in deals were gone overnight. But France moved quickly. By April 3rd, it had signed a $1.2 billion hydrogen infrastructure pact with Canada. $800 million in electrolyzers were set to flow into Quebec and Ontario. At the same time, a turbine manufacturer in the Paris region committed $400 million worth of wind systems to a Nova Scotia coastal project. In the weeks